shoe manufacturer in Marikina and you won a business deal with SM, you'd be really happy, right? But later, reality kicks in. 90 days after your shipment, SM doesn't pay you. So how do you bridge this financing? How are you going to pay your suppliers? So if you're in an emerging country like the Philippines, chances are the banks will have a difficulty lending to you. This unmet demand in financing is what you call the trade finance gap, which currently stands at $1.6 trillion. 40% of this gap is located in Asia, and 52% are SMEs. Having this problem in mind, Vesl actually created a platform that matches businesses with banks and alternative lenders. But before we do that, we ask the businesses to purchase trade credit insurance. Why? You can say the trade credit insurance is a cheaper alternative to putting up a collateral because by virtue of trade credit insurance, it protects you from the potential non-payment of your end buyer. And what does this mean? This means that the lenders will be more than willing to lend you against those insured transactions. So you'd say trade credit insurance has been around for more than 100 years. Yes, that's true. But all insurers have offered trade credit insurance on a whole turnover basis, meaning they request for an upfront premium of $20,000 US. How many companies can afford this? With Vesl, we actually provide the insurers a dashboard where they can manage their risk, their exposures on a real-time per invoice basis, allowing them to offer trade credit insurance per invoice, which makes it affordable and cash-friendly to small businesses, even. So this is where we are now in the market. We're the only marketplace model with no insurer exclusivity and only based in Asia. Everyone else who is on innovating is in Europe. So just to be clear again, we're not an insurer, we're not a lender. We're a platform that facilitates trade financing with the help of special insurance products. We are a platform that offers a value proposition to our partners, to SMEs, like a new product for insurance and financing. To lenders, they can open up their SME portfolio without inflating their credit risk. And for insurers, it's a completely untapped market for them. So we were accelerated in Singapore, and we actually served $700,000 US worth of invoices. But today, we are focusing in the Philippines. And we have already partnered with 1 insurer and 5 lenders, 2 of which are rural banks, who are really interested to do this with us. And now, our main focus is acquiring users, which is why we have already started talks with DTI and other trade associations and education platforms. So this is the addressable market in the Philippines. As you can see, a quarter of the total trades in 2017 are from SMEs. We plan to target at least 1% of that by 2021. Our revenue model is, we charge a platform fee of 0.5% for every insured invoice through us, and a referral fee from the lenders for every match transaction with them, match lending transaction with them. So we're on a mission to close the trade finance gap, which is currently at 1.6 trillion. So we don't plan to stop in the Philippines. By 2021, we'll expand across Southeast Asia. And we also plan to add other insurance products that can help back trade financing, such as warehouse insurance for inventory finance. So this is our team. We are 3 female co-founders, and we've previously worked together. I was a trade finance administrator for a sugar trading house in London, and that's where all the inspiration came from. We were lucky enough to find Cecile, who's actually a very seasoned salesperson with a solid 10-year background in insurance brokerage. So, as I mentioned, we plan to scale in the near future. We're planning to raise a Series A round next year. And we're looking for partners and investors who share our mission of closing the trade finance gap and helping business grow safely. Thank you. That's it. Yes.
So how many clients do you have?
So we rolled out in April. Right now there are 5 clients on the platform. There's $1.4 million worth of credit limits that have been applied in the Philippines.
They're SMEs?
Yes, they're SMEs. Mix of SMEs and big companies.
What's the profile?
Okay. So for the medium companies, it's a pharma company that's manufacturing, glutathione. And hindi, it's not an. And then there are trading companies that are trading abaca across Southeast Asia.
You're registered in the Philippines?
Yes, we are registered in the Philippines and Singapore.
And I'm not sure if you mentioned this, but you're making money in which aspect? In which parts of the value chain?
So our platform, it wasn't easy to create the platform our platform is made to understand trade credit insurance, which is why we charge a 0.5% platform fee for the invoice value. So that's one. And two, once we refer an insured transaction to a lender, we charge a 0.2% of the funding cost.
So 5.
Possible exit strategies.
We want to be the unicorn.
Wow.
Yes.
Go.
So there's no one who has created a per invoice product, although we have seen actually these companies that have started in UK are digital agencies of the big trade credit insurers. So they're tied up with one insurer. Whereas for us, we're not exclusive to any insurer, so we can partner with a reinsurance broker we already have one, who has access to all reinsurers, and we can tap every country by looking for a fronting insurer. So there are levels, a reinsurer, a broker, and an insurer. We just need an insurer for every country who is willing to do this. So we need to prove this in the Philippines first.